The rumor mill swilling both in Ottawa and on Bay Street today. The Bank of Canada is widely expected to announce a 0.25% interest rate increase on Wednesday. If that happens, this would be the first increase we've seen in 7 years. Increase is small, but the impact it could have on homeowners is significant, particularly those with variable mortgages who are already stretched to their limits.
Well, what we've seen in the last couple of years is that people, in order to get into the housing market, have actually got into a situation where they're house poor. They put all of their eggs in that basket. They're paying a mortgage that may be very difficult to afford right now. So any increase in the interest rate is going to perhaps put some of these people over the edge.
Although this is the first rate increase in several years, Campbell says it's reminiscent of the early 1990s, when changing economic conditions meant many people simply couldn't hold on to their homes.
A lot of people who bought houses in the late 80s when there was a house frenzy, if you didn't get into the market, you never would, were suddenly in a situation they couldn't afford it. There was an economic downturn. The houses were worth less than their mortgage, and they were literally turning their keys in to the banks.
Mortgage Scout's Darren Hessip doesn't see that storm hitting just yet, and instead says this is the time to buy, while borrowing is still relatively cheap.
There's a lot of people waiting for prices to go down, and this is something they need to keep in mind. As rates go up, that affordability is eroding as well.
But for those already in the market who may be looking to switch mortgage types, CitiCan Financial's Paul Meredith says stay put.
The reason why is because the rate that your lender will lock you into is never going to be as low as what you could get if you were shopping for a mortgage in the mainstream market.
Hessip, on the other hand, doesn't necessarily suggest switching from variable to fixed rates, but says those signing new mortgages may want to go with fixed.
Well, the average consumer should understand that the BOC, or the Bank of Canada's prime rate increase or overnight rate increase, is going to have an impact if you've got a line of credit and if you've got a variable rate mortgage. If I'm on the fence today and I'm not sure about what kind of a mortgage I should be getting, and you're somewhat safety oriented, fixed rates would be the way to go.
If a small rate change is giving you second thoughts about home ownership, Campbell suggests it might be best to sit back and hold off on a big buy, at least for now.
I would suggest to people to hold off, find out what happens with the interest rates, find out what happens with the housing market, because my guess is that things are going to start to level off.